Hello, good morning, good afternoon, everybody. People are streaming in. Welcome to our weekly live market commentary. Thank you, everybody, for joining. Let's wait a minute or two for more people to start streaming in. Yeah. Anyway, if you have any questions, please put it in the Q&A section, okay? Okay, today, three special guests once again. We have Ella, Chief Market Strategist from Everest Fortune Group. We have Dan, PhillipCapital Trading Representative and Investment Specialist. And also we have Alvin Lee, who is from Societe Vice President. All right, let's wait a few more minutes for people to start streaming in. Okay, for those of you who are here, right, if you have not already known, we're actually running this tournament, which is called the SG Active Trading Tournament. So right now, the tournament, we have some updates. Let me share my screen. Yeah. So for this tournament, you can see 100,000 virtual capital, and we have about 7 days left, right? Right now, participants about close to 2,000, but that's not the main point. So the main point is that you can actually see who are making the best trades every day. So I want to take your attention to this person called Hibiscus. So Hibiscus did bought DLC 5x short on HSBC. So he actually made a return of 55% on that single DLC. Yeah, a great shout out to him as well. So if you go below, you can actually see who are the people who are leading on the leaderboard. Okay. When you click in, you can actually see all their individual portfolios and exactly what they bought and sell and at what time. So this is interesting because it's an open concept. Okay. All right. So those of you who haven't joined the tournament, already joined, haven't traded, right? Please do the trades. All right. So we are giving out one lucky winner, an Apple iWatch Series 5 for people who actually did at least 3 trades. So there's one lucky winner for that lucky draw. As long as you do 3 trades, you'll be eligible for the draw. All right. So let me stop sharing my screen. And okay, let's get right down into the market commentary. So hey, Dan, yeah. So let us know what have you been looking at the market lately, and what's the outlook right now?
Hi everyone, thanks for tuning in again. Okay, for the past 1 week, right, since our last market commentary, there were actually quite a few events. Okay, so we start off from last Wednesday when the Fed have kept the rate unchanged in the FOMC meeting, and they have also indicated that the low interest environment is likely to persist until 2023. Okay, and subsequently, right, after that, at the later part of the week, job data coming out from US once again is weak again. Okay, it has been below expectation for the past 2 to 3 weeks, and it doesn't bode well for the economy recovery at this point in time lah. Okay, then coming back to this week, right, actually referring to my daily update on Monday, actually just before the market opened, I did wrote something about maybe a mini US tech rebound. Okay, basically based on 3 points lah. Okay, 3 observation. Okay, one of it is that there is no doubt that this tech is a beneficiary from this pandemic, because be it whether it's telecommunication, whether it's a chip maker, or whether it's e-commerce, okay, they all benefit from this work from home arrangement. Okay, unfortunately, there's one news event that occurs on Monday night. Okay, it was unexpected, but then again, it created quite a big ripple on the market lah. There's this fresh scandal on this global market with regards to this leaked document suggesting that there are a lot of suspicious transaction over the last 20 years, the 2 decade, amounting to more than $2 trillion. Okay, and the Singapore banks are involved in it as well, but more on that later. Okay, so what happened is that the Monday, US opened on a deep rate. Okay, at one point in time, actually, Dow actually went as low as 900 plus point. Okay, but by the close, right, we see a buy on dip, some bargain hunting, and a lot of these indices in US has recovered from their low. Okay, one notable one is actually Nasdaq. Okay, which only closed like down 14 point, and the rebound is actually led by Apple and Microsoft. So actually, the tech rebound has already started this week, but it's just that they are being pulled out by these unexpected banking sectors that came out on Monday night lah. Okay, and looking forward, right? For personally, I'm expecting the tech rebound to be on the table for the rest of the week, mainly tomorrow and Friday lah, because they have been down quite a fair bit, and of course, the number one, the VIX has also been dropping. I have been observing the VIX, the weekly chart for VIX for the past few weeks, and they have been dropping for the second week already. Okay, and also for tech, right? We have already seen that the drop is getting less and less. Okay, it could have been indicating that the selling pressure could subside in the days to come. Yeah. Okay. So over at Singapore side, right? Last week STI was very flat. Okay, it was holding out very well. Okay, until yesterday they actually broke the support level at 2478 lah. Okay, mainly because STI is bank heavy. Okay, the three bank is actually being affected by the scandal. Okay, for the record, right, the Singapore bank, three of them, the transaction amount, the suspicious transaction amount to about US $4.4 billion. Okay, so of course, if you compare to global banking side, it's not that big, but in Singapore term, it's actually quite a big amount lah. Okay, and going forward, right, we don't know whether, I think we need to let the market to digest this news first and see if we can see if they find out anything that is really illicit over this transaction. Because having said suspicious transaction, right, doesn't mean they are illegal. Okay, because for every even for us, right, Phillip Securities, we do file SAR now and then when we have some unknown funds coming in. So suspicious doesn't mean that they are illegal. It's just that they are suspicious. So assuming that there's no illegal transactions from this investigation, right? I think the market will just digest the news, and the bank will just slowly, die out as coming back up on the rebound lah. Okay, but of course, to find out on all these transactions is not easy because it's spent over 20 years. Okay, and on our side, right, other than the banks, right, we don't have much, but there are one bright spot. Okay, that's our office REITs. Okay, last week, Tencent has announced that they are setting up office in Singapore, following the Alibaba and BitDance. Okay, and we see some upside on REITs like Mapletree Com, Mapletree Industry, those office REITs and commercial REITs. Okay, this week the REITs are still there. Okay, it's not too bad. Okay, they didn't really drop together with the banks. Okay, so office REIT is one sector that is doing quite okay. Okay, and for Singapore market, right, there's one counter that you guys may want to take note. Last Wednesday, right, Wilmar announced that their China listing, this China Yikai Carry Arawana has already been given the final approval to list on this China. Okay, today, China, rather Wilmar is being halted. Okay, I presume it's because according to their official document, the timeline, right? Today is actually the day where they are supposed to give out some information on the listing. Okay, like for example, the issue price, you know, some of the cornerstone investors, and of course the date lah. Listing is expected to be on mid-October. Okay, and this is viewed as a good thing for Wilmar lah. Okay, why do I say that? Because this listing is potentially a value unlocking exercise for Wilmar. Okay, it could also as a result reward shareholder with better dividend payouts lah, or maybe in the form of special dividend. Why? Because after this Arawana is listed in China, right? They no longer need to draw on Wilmar balance sheet to fund any expansion that they have planned for. Yeah. So going forward, I think Wilmar is one counter that investors may want to take a look at. Yep.
Thank you, Dan, for sharing. I think the past week has been quite interesting as well. Okay, so for the Hong Kong front, Ella, can you share more about what's happening as well?
Yeah, so I think the same thing in the banking. So the suspicious transaction also happening has already affected a lot of names in Hong Kong. So I think one of the name you have been quite familiar for Hong Kong investors is HSBC. So HSBC has seen very severe drop recently, not only from these suspicious transactions, but also from recent political tensions. So the share has been dropping to about 19 Hong Kong dollar. It was even lower than what it was in financial crisis. So like 2009, it notched a record low at around 30 Hong Kong dollars. I think what does it mean to investors? There's something to point out because HSBC has been it's quite symbolic for Hong Kong investors. So I used to work for a Hong Kong bank, and have been working in Hong Kong for 1 year. So, and I have known that for Hong Kong investors, HSBC is almost like everything. So if they have spare money, they go to buy HSBC. So for one thing, because HSBC has been one of the insuring banks by the Hong Kong MA, so Hong Kong MAS, and it has been quite dominant in Hong Kong market for long. And then the second reason being, it has been a quite dividend giver. So it will usually announce 4 dividends 4 times per year. So for those especially for those elder age investors, if they got spare money, they go to buy HSBC. So it's almost seen, as something some Hong Kong people's face in their investment portfolio. So right now we have seen that HSBC has touched a new low around 19 Hong Kong dollars. So there are several reasons for it. First of all, we know that there are rumors, there haven't been news. The rumors that HSBC were likely to be listed in China's unrealizable entity list. I think much of the tension comes from its involvement in Huawei, that event. So it was said that the Huawei CFO Meng Wanzhou was caught because HSBC, his private bankers, help the US to get some key information to get her caught. So that has caused some displeasures in China. And at the same time, HSBC was also lambasted in the US and the UK over its support for China's new security legislations in Hong Kong. So it's like, it doesn't get favored by both parties, both in the West and in China. And I think fundamentally, if you look at its recent earnings, it doesn't did as well as others before, as others at the same time. So if you compare that with Citibank's and the JP Morgan, right? So HSBC stock has been fallen more steeply. It has been fallen around almost 50% plus, while Citibank has dropped about 44 and JP Morgan only dropped about 29. So both global banks. So one reason is because it has larger credit provisions compared to others. it happens before. So in previous financial crisis, it's also posted very large credit losses from this lending business. And meanwhile, it also has a jump in its market business, mainly that FX trading, bond trading. But compared to its competitors, it's less, So I think that's one of the reasons you could look for in fundamental pictures to justify its drop. And I think the third reason, as I just pointed out, so it kind of scrapping its dividend policies. So that's a huge shock to, I think, a lot of Hong Kong investors, because a lot of elder investors really rely on dividends for their for their monthly or quarterly incomes. So that's something that is really damaging the image of the bank. So I think combining these three reasons, I do see more downside for HSBC until we see more, more clarity in these political tensions. Yeah, so I think that's one important and very exciting stock to talk about. And apart from that, I think there's some, if you have been shorting Geely in your DLC competition, you will have, performed very well, because Geely Automobile also suffered some severe losses recently. Okay. So it dropped about 4% or 4% yesterday and has been on a drop recently. Yeah, let's talk about some good news and bad news for Geely. So my personal opinion for Geely fundamentally is more neutral. Okay, I think one of the good things I see in recent earnings report is that it has been marching quite well. So strategically has been marching quite well towards the premium brands. So Geely has been a top, in the top tier so-called domestic auto car makers. So it's the number one in terms of the sales number. Among all the domestic car makers. I mean, not to mention with luxury brands, which like BMW, Mercedes, who have joint ventures in China. But domestically, it's the number one, okay, so far. And then it has been focused more on those lower end or, mid-class consumption market. But right now, what we have seen is it has made a lot of acquisitions, including, it has acquired Volvo 10 years ago. So so it's a good march towards the premium market. And right now it has been announcing, further cooperation with Volvo. So these two companies has planned to merge together. So after they merge, I will see more closer cooperation in those branding and in those marketing and even sales. So that's a very good trend in line with what is happening in China's car market, because during the past 3 years, their data that's showing overall the car sales has been dropping from since 2017 to 2019, but of it, the luxury car market has been outperforming. So it still get a 8-9% very high low digit growth during these 2 years. And if you look at what happened this year, okay, we have known that COVID-19 has been hitting China quite badly during January to April. So after April, the market kind of come back to normal. So during that period, this luxury car sales also outperformed the total car market. So I think back in April, the luxury car has marked about 15% of increase in that single month, while the overall car sales is still in a negative growth year over year. So that's a very good trend for Geely if they manage to to do this merge with Volvo well, and then they continue to launch good branding and good car models. But I think I don't like about Geely is they have too many brands right now. Domestically, if you compare to other car makers. I mean, not to those luxuries, not to Volkswagen, like that. It has 21 existing car models. It's quite a lot. And in terms of branding, right now it has, three main brands. So Geely, Link, and Volvo. So these three brands are meant to tap at lower end, middle class, and luxury market. But it seems that there's some price overlapping room that is, eating into its own operation efficiencies. So, it's still getting more cars in its pipelines. If I'm going to invest to Geely, I would like to seek for more clarity, how they're going to manage these overlapping price rooms. Are they, are they going to more inter-competitions between their own brands? Yeah, it's not easy to manage so many brands for a car maker. We have seen such example, in the history, we have seen that General Motors and Ford, they have such multi-brand strategy, but they ended up with one or two, main brands at last. Because if you have too many brands, it's very hard to maintain. The first one is your maintenance cost is very high for each car model, for each branding. And the second is you could have inter-competition because your car models are kind of similar, and then the price are kind of similar. So when customers are choosing, you're facing inter-competition, competition from your own brandings. So I think that's why I stay neutral on Geely right now. So until I see more clarities in those brandings and how they're going to differentiate between those brandings, I do see more, this consolidation or downside could last for a little bit longer for Geely. Right. So I think another stock that has been caught market attention is Sense China, right? Sense China actually quite interesting. So it has been dropping quite sharply recently, especially since last week. I think market was quite optimistic before last week because we have news that China is probably going to reopen the Macau visa issuance for mainlanders. It's gonna commence on 23rd this month. So that's a huge bullish news for Sense China because it might have more, you might have the mainlander travelers back soon. But I think what is hurting the sentiment is that UK, you have some bad news from UK, so that more cases from there, the COVID-19 cases are coming back, and UK is almost close to lockdown again. So guess that's definitely not good news for a casino business where you like to see a lot of traffic, a lot of people there. Yeah, but if you want to talk about fundamentals, I do see like Sense China could stand as a, could seize the opportunities better. What opportunities? Because in 1 or 2 years, 2021 or 22, they're gonna be reissue of license. So Macau government has been controlling the license issuance every 20 years or 30 years. So this time is gonna be this next year or the year after. So there has been some speculations that Macau doesn't want to rely on casinos as this pure revenue. So he also want to copy other cities' example to delve into other business like exhibition or business tours. Yeah, and then also like travel and shopping, same as Hong Kong. So I think if this license is going to hit casinos at large, since China is at best position to embrace this new age, because it's you can see it's very well position in terms of its shopping centers. You know, if you have visited Macau, you would know that you have Venetians. It has built Parisians as well. So it's kind of like themed hotel and the shopping mall. So like all stop shopping mall. And it has also built the new project, the Londoner. So you have Venetian, Parisian, Londoner. So it kind of like synergy. So every shopping mall you have a big statue and you know, very good vibes. All the brands are there. So if Macau is going to embrace this new change, I think it's best positioned to embrace, you know, the so-called change. Yeah, so more shopping or more other business revenues from other than casinos could be get more easily than its competitors. But speaking of that, that's more long term. Okay, so if we're looking at near term trend, it's going to be quite hard for, you know, Sands China or even other casinos to see near term tailwinds. Yeah, until we have a concrete news of about vaccine. Yeah, so that's mostly what happened in Hong Kong market. Yeah.
All right. Thanks for sharing, Ella. So over to Alvin. So regarding the DLCs where Dan and Ella shared. So maybe you can share some of the movements of the interesting DLCs that happened for last week and this week as well. Yeah.
Yes, sure. I think, first of all, thanks, Dan and Ella and Evan. I think one of the things that I really would like to share with you today is that, what Ella has mentioned, HSBC, obviously it has been performing very badly in the past, month. And but DLC actually allows you to get a positive return from both up and down movement of the stock, right? So I think it'd be great if we can focus on this HSBC short DLC today, and look at how it has been performing in the past month. So let me share with you our DLC website. And actually on the website, there's a page that allows you to look at the historical performance of the DLC versus the underlying stock. So let me go to share my my Chrome. All right. So so you can see that we are now on the DLC website, and then if you go to products, search, and then you see that okay. First of all, by the way, today the top traded DLCs are Xiaomi, long and short. Just FYI, as you can see from here. These two DLCs. All right, the third one is HSBC, but it's the long. Let's go to the short side, so we can select HSBC from the drop-down list, and then we can see that this DLC, right, DYAW is the only short DLC that we have on HSBC, and I just want to share with you that we usually issue a DLC, right, at say from 20 cents to maybe $2, right? Usually we won't issue any DLC higher than $2, and we issued this DLC at around $2 to $2.20 in February 2019, about 1.5 years ago. We issued at 2.2, and now this DLC is worth $18, and it's crazy, right? Given if you look at HSBC chart, right, it's been dropping nonstop, and this DLC, which is the short and leverage version of it, has been going up nonstop. So if we click on this DLC, and now we are on the DLC terms page, it's now at a 17.79. And right, so we list this DLC right in February 2019, as you can see from here. And then if we want to look at the historical performance, we can check this historical compounding return page. This actually tells us how compounding works for different DLCs, because I think one key characteristics that we we have to bear in mind for DLC is that DLC's leverage is on a daily basis only, and for these 5 times short DLC on a daily basis, you can expect this DLC to bring you a very close to negative 5 times return of the daily return of the stock. So for example, today the stock is down by 2%, then you can expect the DLC to be up by 10%, right? So this is on a daily basis. But obviously this relationship, this 5-time relationship would not hold if you hold a DLC for longer than 1 day. And if the longer you hold, the more deviation there is from 5 times. But this deviation can be more than 5 times, can be less than 5 times. It all depends on the path of the underlying. And HSBC is a very good example of a positive compounding that we have got over this period. So if we let me reduce the size. Okay, so if we scroll down a bit, you can see that okay, first of all, over the past 7 trading days, HSBC, the stock, went down by 10%, and this DLC went up by 66%. So you can see that this is definitely more than 5 times, right, from the stock. So there is already a positive compounding in the past 7 days because HSBC has been, all the way down. And if we drag here for a longer period of time, then you'll be able to see that, for example, when the DLC is all right, when the DLC is okay, throughout the past, say, say 80-ish trading day, the stock was down by 27%, and then you can see that the DLC in the same period was up by this much, right? So as you can see, this line is basically the chart above is the HSBC price chart, and then the chart below is the percentage cumulative performance of the DLC versus the underlying stock. Okay, and then so you can see that there's has been a very huge positive compounding in the past. And if you drag for a longer period of time, this is pretty much the entire life of this DLC so far. The stock was down by almost 50%, almost half, and then this DLC went up by more than 6 times. So this is how I think DLC can. I mean, okay. First of all, DLC is not meant for long-term holding. Okay, this one we have to emphasize. But in certain cases, when you have a very strong view that the stock will go in certain direction, either up or down in a trend, for example, in this case, let's say, let's say a year back, you anticipated that the HSBC will just go all the way down, and then you are very, confident about that. Then in this case, yes, you can hold a DLC for so much longer than a couple of days or a couple of weeks. You can hold a DLC for even months or even a year. All right. So I think we can hold a DLC for a longer period of time, so long as we understand how compounding works. So this is something that I would like to share with you today.
All right, thanks, Alvin. I think this is one of the real case studies we can see from the example of HSBC right now as we speak. Yeah, this is pretty amazing, right? So okay, so for audiences, if you have any questions, please put it in the Q&A section below. All right, no questions? Okay, I think I got a question for Dan as well. So on the topic of the banks, right? Let's say DBS has been, they found out there are some from the suspicious transactions to like those things that are sort of against the law lah. What is the worst case scenario that can happen to DBS? I mean, there are some commotions in our community talking about it as well.
Right.
Just want to seek your opinion.
Sure. Okay, if there is indeed some illicit transaction being found on DBS itself, right? Potentially, okay, we could see DBS revisit the $13 to $15 level Okay, why do I say that? Because it would be a very big issue here, not just because of the amount, okay, is of the governance of the bank and the confidence that investors have on the Singapore government. Yeah, because DBS is as they what they call it the Singapore bank lah. Yeah. So if there is indeed something that is being illegal going on, then DBS may potentially visit the $13 to $15 level. Okay. To go lower than 13, I think that would be a bit difficult because apparently the Singapore government will surely come in, to do some fact find, to reassure the market that DBS is doing everything to uphold their integrity and of course the credibility of the bank. Yeah.
Okay. Thanks, Dan, for sharing for this. Okay. So, audience, anybody, any questions? No questions this week. Okay, if there's no questions, I'd like to reiterate that the SG Active Trading Tournament is still live and we have about 1 more week to go. So the top of the charts right now, the first person is actually leading at more than 50% return within that 2 weeks. Yeah. So if you have not joined the competition or started trading in the competition, please do so because there are many prizes. Of course, if you register, we'll be picking 2 lucky winners to walk away with an AirPods Pro, the earphones, which is worth $400 easily. Then if you make 3 trades in the competition elimination round, you're eligible to win, to stand a chance to win the Apple Watch Series 5, all right, worth $600. Okay, so if you haven't signed up or haven't traded, right, start trading now. Okay, so we'll end the commentary here. Right. Thank you, special guests Ella, Dan, and Alvin for sharing with us today. So market's gonna open in half an hour, and we'll see you trading there. Thanks, everybody.
Thanks.
Thank you. Bye bye.
Thank you.
Thank you.
Bye-bye.
Thank you. Bye bye.